Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, June 19th, 2019. Happy Fed Day. I am Frank Ochoa, aka PivotBoss, and here's a look at the ES in the daily time frame here. We are awaiting the FOMC statement later on this afternoon and the Fed interest rate decision. This is partially why the market is very, very quiet here. Heading into this event over the last week, in addition to today's session. Yesterday was quite a bit more volatile than you would normally expect ahead of this event, but for the most part here we are trading just 29% of normal. We are at a range of 8.75 points of overnight range, and we are likely to see further range-bound activity heading into the event. This will be a very significant number here, as it usually is. The last time we got an FOMC key level was May 1st here. That led to selling pressure. The retest was also offered, and we've dropped away from that level ever since, and now we're rallying back. This is the FOMC key level from September. We're trading right at that zone right at the moment. Again, the FOMC key level will be the 1 o'clock p.m. open price, or 2 o'clock p.m. Eastern open price, right when the statement is released, and that will give us another level to keep an eye on here and use in our analysis and trading moving forward over the next 4 to 6 weeks. So right now, this is going to be very important, but we are likely to see further range-bound activity, fade the edges throughout the day, sell highs and buy lows until proven otherwise, but really not a whole lot is expected to happen until the statement. And even then, once it is released, the days that follow will be likely the days that see much more volatility. So let's take a look here at the NQ. You'll see here the NQ also trading in a very narrow range today. Very, very small range that's developing here in overnight trading. Just 28 points of overnight range, and that is about 24% of ADR. So that is just almost a quarter of normal range size. So very, very modest trading behavior. Again, not a whole lot is expected to happen today, but fade new highs, fade new lows, which means every low that's taken out could be a buy opportunity back up. Every high that's taken out could be a sale or a fade back to value. And right now, not expected to see a whole lot of action until that number comes out. If we take a look at crude oil had quite the day in the previous session, a big, big day. As a matter of fact, the ES, the NQ, crude oil, all these markets here had 150% of ADR in the previous session. That's a pretty big high range day in the previous session, and usually after a session like that you tend to see narrow trading range behavior. Right now we're at 35% of normal with just 68 ticks of range, and we are trading basically right at that 54.42, which is the FOMC key level from January. So here you can see price go offered through it, then taking it offered here, defended it here, and over the last 2 days holding right at it. So we're going to get another number here very soon. Remember, we are still holding below that 55 LVN, so if it pushes above that level, this could be significant. One thing we looked at in the trading room yesterday is how similar this reversal is here to the reversal we saw earlier in the year when price rallied from 42s back up. And it started with a pretty sharp rejection here. It started to see absorption here, and then you saw the continuation that followed afterward. And so if you come back to the beginning of the year back here, it's very similar. You saw the drop in strong reversal, the absorption, and then the continuation. So we're starting to see similar signs that that is happening now. But again, that 55 level is very important. Above that level could open things up toward 59.65 to 60. And failing to get above that zone, say that it tries and fails, that could open up a continuation down to as low as those 42s for a retest. So this is going to be interesting here to see how this develops, but overall we got a very clear range-bound market here, and it's building ahead of the Fed, and that could lead to some nice breakout potential here down the road. Lastly, taking a look at gold futures, you'll see here this one has seen quite a bit of action here lately. It's continuing to test prices above the 1350s. That 1349.80 is the top of the key range, and we've seen spikes above that level. We've seen price trade through it, but each time close back below it. In the previous session, that's the only time here that we closed barely above that level, but showing upper shade here at the upper end of the day's range. Right now, an inside day, not quite as narrow as the other markets, but trading 40% of normal right now. And this has been in an uptrend that has been very bullish here. Every pushback into the 8-period average has led to another round of strength, and doesn't appear to be slowing down at the moment, even though we are seeing some range-bound activity up here and some rejections above 1350. It still looks poised to try and reach the edge between 1360 and 1375. That 1375 5-year resistance, 5-year highs. You can see the profile basically stops right there and gets very, very thin here, and then everything else comes out this way. That tells you right there that's where rejection has occurred over the last 5 years. Again, that's going to be a zone to continue to watch. If price can break through 1375, that could open up a move through that LVN into 1525, so they could be pretty significant. We've built out a large rounded bottom over the last 5 years in a weekly time frame. That could be significant, but again, until proven otherwise, this is resistance, and every time we come into that zone, bears are going to likely try to defend it for a shot at returning back to value at 1286.70. So right now, still very bullish until proven otherwise, but we're getting into a zone that's very, very clear as a level of rejection. All right, that is it for now. We'll see how this develops heading into the Fed. Again, happy Fedness Day. We'll see you soon. Take care, and I'll see you in the trading room.